afternoon, everyone, and welcome to the European cross. Actually, I apologize, the daily FX roundup. Sorry about that. I was just communicating with some of the guys in the chat area for the team. So anyway, apologize for the delay in starting up, but so let's go and take a look. Let's actually go and move in real quick to the intraday. We do see the cable moving around here, so bear with me one moment. Okay, you can see here we're popping now. We did have some resistance here, and actually, good thing I was coming on the webinar. Actually, off of this low here, I didn't even join in because I haven't even traded crepe in a while, but I missed the opportunity. Blake had picked it up and scalped out, and I was going to join him, and I thought, heck, I haven't even traded this thing in a while. What the heck am I doing? But I should have. I mean, we had on this 5-minute chart, had the resistance at 28.20, and then again at 35. And we actually paired back a little bit from 35, but we are reasserting ourselves and getting beyond that. And since I was coming on the webinar, I had actually put a limit at 40, and it didn't quite, obviously didn't quite make it. I had to stop here. We came back down. We came down, what, to about 22. So at least it could have carved off at least 10 ticks, which isn't even that much pips. But once I said, hey, I'm coming on the webinar, I don't scalp if I come on the webinar because I'm usually just, straight up staring at the screen. So it turns out to be the best thing because then I, be a little bit underwater. Not too bad, but once again, we've already come off quite a bit here. I didn't even notice this. Look, like I told you, I've been doggone it. Look at that. A beautiful gravestone doji on a 5-minute chart. I mean, I've had this here on the side, but I haven't paid much attention. I've been looking at the crude oil. I actually got stopped out of that crude oil position that I put on. I was scalping yesterday during the day and doing pretty good or doing all right. And then I put on that short as the market was already up already like $1, I don't know, like $1.50 off the lows, and we'd already gunned some, good volume at was it 53.88? I think it was. Yeah. No, let's see, it was a 54.88. Yeah. And so I thought, okay, that's a good area. Thing that kind of ticked me off is I was mentioning to the guys in chat room. I actually had the opportunity to go on and scratch this trade, which really ticked me off because I didn't, and then of course it went higher and I got stopped out. But anyway, I just noticed that. Look at that, a beautiful gravestone doji here. God, that was a nice little setup. Wasn't even paying attention to it at all. But anyway, here's the deal with the crude oil. This has been bouncing around. I was hoping to work a limit up here. Right now I'm not doing anything with it, but we've got some confluences here. To start with, let's go and take a look here with the crude oil. If you the 56.47 is 161% of this range right here, okay, from top to bottom here. But we also have a level here at 56.65. But when you look at it on a daily, let's get to that real quickly. I was hoping they were going to hit that this morning. Bear with me. Right here. You've got the 57.14 is going to be the 50% of this entire move, and confluence is with 57.15. But 56.51 is a level here. So I just want to go on and advise. Let me jump back into the other screen. I was hoping we were going to hit that earlier this morning, and I thought that would set up a nice, drop back, maybe all the way till about 56 or 56.10. But you can see we ran out of gas before we even made it to 40. I thought that after the run up, I thought that would have been a good area for them to goose. You can see here, goose some stops, and then start to pair back. And that would have been a pretty decent level. I think we can potentially make it up to 57.15, and that's also the 50%. But I thought in the short term, hey, we hit somewhere between 50, let's say the 50s to 56, 65, 67. I thought we'd get a good pair back. Well, we've already seen the market come off almost 40 cents, or actually more than 40 cents. So at this point, I mean, I wouldn't recommend that because me and one of the guys was talking in the chat room. We're talking about how crude oil, we have been saying for most of this week, we're saying, or part of last week, we're saying, hey, look, it just feels like there's a $1.50 move lurking around here somewhere. Well, we saw it yesterday, but he was saying, which is true, once it settles in a direction, you just don't want to fade it, withers to the upside, the downside. And as we go later into the day, I would have loved to have that 56.65 about an hour and a half ago or even an hour ago. But look, now it's already done the work here. You see, we've already rallied up to 35-ish, pull back 40 cents, rallied up to 56, almost 40, pulled back nearly 50 cents, and now rally. So you see, you've already got some good volume in here, so we could make that extension. So no, I don't want any part of it. Um, and one of the things is that I wanted to go and touch on that because some people have had some tough times trading, just frustrating, the not getting the market right. And what I was trying to share with them, and I think is important because we all have losses, and losses are part of the game. If you get out of sync with the market, and for me, I like to be in sync in the sense that I can see or sense how the rhythm of the market's going. If you remember, we kept talking about 14.95 with the gold and how it kept rotating off of that lower and lower. And I said, no, I don't want it anymore because we'll eventually break higher. Well, we dipped again, but this morning we did go in and break higher. And break higher, we had a pretty good run on here. I wouldn't even do anything with it. My fault. But the point is that if you, depending on whatever market you're trading with, it's a euro, the dollar itself, or crude or whatever. If you get out of sync with the market, the best thing you can do is there's nothing wrong with just sitting on your hands and not doing anything until you feel you've got a good opportunity here with the market, or you can sense how it's playing out. One of the reasons I stress, although I do incorporate the fundamentals, like the news. I mean, when we come in and the European crossover webinar in the morning, we do cover where we've moved overnight. Then we kind of look at things across the board. We also look at economic reports that are coming out. One of the things we saw this morning when you saw the euro spike was because if you look here, we had very good French PMI that came in here, and we saw a very, very nice jump on here on the services PMI. Look at the 5209. It caused the euro to jump up to 1160, and then we turned around and slid back down. Then of course we had the German numbers. They're about as worthless as you know what. They slid. They basically just even went lower than they were already looking for. It's already been low, so that pushed the euro back down. Then of course the ECB didn't do anything. But anyway, I just want to go on and point out is that we cover that, and then we'll cover a couple of news items, one on FX and then one called the morning bid that kind of gives an overview. And it kind of sets the tone for the day. That being said, what I suggest is I was telling one of the guys is, always just kind of stick with the technicals because, like, let's say how wacky that the whole Brexit thing has been. The technicals, I don't want to say you don't have to know what the market's doing, but it assesses what those risk points are, and you can come in wherever you want to. You could have come in just today and not even looked at Brexit or whatever the market's for a week and a half or something. You can come here and say, okay, here's my levels or whatever, and assess where you're going to go and come in. And that's a problem when you're trying to prognosticate or say the cable is going to go to this price or it's going to go to that price. And I just want to touch on that because some traders have mentioned that they've had, kind of been jerked around with either the euro or other markets. And to me, I think it's important to focus primarily on the technicals, although I do take into consideration where economic reports are and where we may push. And as I mentioned, the tone of the day for the markets. Do we have a lot of economic reports? Could we get ourselves in a tipping point, which we did with the gold market? So those things do help. But one of the things you can do is when you're looking at these markets is, determine what the ranges are, whether you're scalping or whether you're holding for several days or longer term. That way you can assess where your risk is. And if for me, as I put on that short late yesterday and I ended up getting stopped on there, I guess it was a good risk reward, but I didn't think we'd push even further after we'd already moved to $1.50 off of the lows, but we did. But what I did was I came back and said, you know what, I need to reassess, even though, okay, yeah, it did break out. We moved higher. Let me see where things are going. I grabbed a quick scalp this morning and I haven't been able to do anything. I was looking at this area, but I'm not happy with all the work we've done here. So that means that we can still move higher. I think we probably will make it to 57.15. But like I said, when you get out of sync with the market, one thing I can suggest is, nothing wrong with sitting on your hands and getting resynced up with the market. Like I said, there's been many times in the past where I said, oh, the euro's going to go here or the euro's going to go there. And you end up defending your position or even to your own self instead of just going with the technicals, because ultimately, whatever news there is, whether it's the ECB or this news, the Bundesbank or whatever, it's all going to be reflected in the price points anyways. And so you just assess the risk using those levels. I don't want to make it sound like it's simplistic, but I tell you what, that takes a lot of this second guessing out of the thing. You know what I mean? Either you're right or wrong, and either you're in sync with the market or you're not. And if you're not in sync with the market, there's no sense throwing good money after or bad money after good or whatever you want to go and call it. So let's go and move into FX. Anyway, I thought I'd just touch that because several of the guys have noted, you know, this week's been a little bit difficult for them. And my point is, uh, it's been a tricky week. It's been a very tricky week. One of the things that we've touched about with the euro also is um, we talked about over the last, you know, almost 2 weeks now, where the bund was starting to fall. And I said, hey, watch out with this euro. We might take off. And at the time, we were trading at 980, and we finally broke higher, and boom, 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 we rallied higher. But we've got to a point, I've already pointed it out several times over the last few days, that the bund has come to a point that it's really oversold and into what I refer to as a value zone. So I was even saying, hey, look, even if you get one more pop in the euro, I'd get the heck out of Dodge. I was saying in the European crossover report, this webinar this morning, is if we did get some kind of surprise out and it popped up, I'd be using that as an opportunity to get out, because right now it's the bunds that led the euro lower, and it's the bunds that have led the euro higher. And the bunds now are pairing back and are in that value support zone. So the upside was going to be a bit suspect here, you know, with the euro, how much further we could go in and add on. At least that's my take. Now, that being said, I am bearish the dollar until proven wrong. And when I say proven wrong, from the technicals, not my take. Like I said, I've given up the prognostication business, but I'm just going with the technicals. And I'll give you the scoop on this thing is, you know, over a week ago or a week and a half ago, my target was going to be 97.89, and that was going to be this. That was our bias chart. We were looking for that to hit as we moved closer to that, and that's that huge. It's a weekly level, 97.89. It goes back. Look, it goes back quite some time. So it goes back to, look at this, May of 2017. Okay, so you know, this was actually at the time for a while we haven't had this in red as a pivot, because the market would get above it, then we slide back and forth. But when I thought that was going to be a target, and I expected a nice bounce off of that. Okay, when we got there, so you can see we came over here, we hit it, we got to the very low was 97. 90 or right 89 right there. Okay, and so I'm thinking, okay, we're going to get a nice bounce off it, and then the bounce was all of 21 ticks. Okay, all of 21 lousy ticks. That's all we got out of it. So when we broke lower and we finished the week below 97.89 last week, it's just a straight up sell. So even our bias chart resistance, pull this over here, you can see we have 97.89. And my take is, hey, look, it's a sell on any moves towards 97.89. Now, yesterday we had 97.65 as our bias chart resistance, and we came and hit that just to the tick. You see there? Right there? And then we came off, and the support's been 97 if we do get down there. But to me, it's a sell up to on any moves to 97.89. One of the guys was asking about this. I said, hey, look, you know, your levels are right there, 97.89, and then the rebound high, which was really pretty piss poor, which was 98.10 or 11, whatever you want to call it, basically 97.89 and 98.10/98.11. Okay, so the only way this bearish picture is negated is if we close the week above 97.89. Okay, and even then, so is it bullish? No. All it does is negate the downside, the temporary bearish outlook. That's all it does. It doesn't turn this thing bullish. This market would have to get bullish, then would have to get a close above 98.66, a daily close above 98.66 to turn bullish. Once again, it's a sell to 97.89. The secondary resistance level will be 98.11, which was the rebound high. And so I guess you could, you know, if you were to sell it, you could actually have a stop with a daily close above 98.11. But like I said, it's a sell until proven wrong up to 97.89. And if we get a weekly close above 97.89, you'd want to get out of it, out of the short, but you wouldn't be risking very much. I'm just saying if you come in at a very good level, I guess some people would even come in almost now. But I'm saying 97.89. But once again, if it closed above it, you would close out your short, but you don't go long, because all it would do is negate the bearish outlook. Looking at the cable, we did see a pretty good move. We even went sub 28, well, and we're here at this 28.50 here. So we did get a nice little rally up against here. We had our bias chart support Today at 28.40, and just, we saw some headlines. Like, honestly, I don't even pay attention to those headlines anymore. I mean, other than just to say, okay, now it's negative, they're going to push the thing. We were actually holding above 28.40. And we got some bearish headlines. We went below that, and this was a nice area here. I wasn't paying attention at the time, other than when I saw that Blake got long for a scalp. I thought, okay, well, they did take out 28, and if they don't fall apart, maybe we will get a bounce back. I thought it might be good for about 20 ticks, 20 pips, maybe 25. And but I thought I should have jumped in, but I thought to myself, hey, look, you haven't even traded cable, and now you're just gonna jump in willy nilly. But it did rally back, so I was like, no, think that's how it happens. It's been that kind of a day, so I'm not kicking myself on that. I'm just trying to sit back and just observe how things are going. I did want to go and pick up the euro. Now we have our bias chart support at 1080 here in the euro, and that was a little bit of on a dip in case Draghi came in with any surprises. But that being said, I didn't want to go and share this. Um, I thought we might have had an opportunity to see that if we hit some stops. You see right here, the 38% comes in at 1065. This is actually, you can see that the low was set here on this bar. It's actually comes in at a 2-hour support level. So we got a nice confluence there. So I don't like to hold positions over the weekend, but if someone were to get short and we do make a move as we come down towards tomorrow, I was hoping we were going to hit some stops this morning and flush out some longs. I was like, boy, I'll pick that up for a jump back, but it hasn't happened. If we slide back tomorrow, this is going to be a good support level. If we do get down to 38%, but our bias chart support is 1080. The low for the move so far has been 1093. So anyway, there you go on that one. Dollar CAD continues to remain weak. Just can't really get any higher. Now we did have our bias chart support here. Bear with me. Oh yeah. I even forgot where the heck I was going on this thing. Hold on, bear with me one moment. Oh yeah, the dollar CAD. Okay, hold on. I lost my train of thought. Okay, so here's our bias chart support, which is that 3043. Remember, we were looking for a move down to 31 last week. Well, we said it had a date with 31, and then we had supported 3090, and I thought we'd see a nice bounce. Well, the bounce only made it to 3024, which we had our resistance 3136. So this thing has not been able to pick itself up. But we do have our level here below that at 3043. So, like I said, I think it's been a bit tricky this week for a lot of people. Same thing here with the peso. Peso continues to remain weak. I don't think we have to spend any more time on that. We've been talking about that. I've been made the case. I think I made the case more emphatically yesterday in the daily roundup is that honestly, I don't see what people were seeing. I did not see anything that was bullish about this thing whatsoever. About the only thing you could hang your hat on was it was treading water at the lows, and that's about it. You see what I'm saying? We had 1908. I had that since last week. We said if we get a daily close below 1923, it opens the door for a move to 1908. Well, we got 1908 yesterday. We actually took it out by just a little bit, and we popped back. And then our secondary support, which we have on the bias chart, is 1902. And I don't know what this thing's going to go and do, but I'm just saying is we talked about this, ad nauseum. And when we broke 1944, that really had the bulls in my sense from a technical perspective because I don't have a dog in the fight. I haven't even traded the peso in a while, so I'm not bearish or bullish. I was just making the case that how disappointed the bulls were going to be. They held the 61%, they rally up, they come back down at 1944. I said, look, you lose that, that's it, done, over, adios, sayonara, it's over for the bulls. And sure enough, that's what happened. The only difference was that I thought we'd get a bounce at 1923.6. And we couldn't even make it up to 1930. And this thing still looks just weak. I mean, it's the old proverbial commercial. I've fallen and I can't get up. It just simply can't. You see what I'm saying? Other than that, that's about it. Oh, wow, we've really gone through all the time. But thanks for joining us here, and good luck trading. And thanks for joining us here on the FX Daily Roundup.